Hi, good afternoon, everyone. This is Mark Newman from Bernstein. And next session up, we've got Dave Zinsner, Dave Zinsner, CFO of Micron, and also with Farhan Ahmad, who's the head of IR for Micron Technology. So I think you all know who Micron is. We're going to have a brief introduction from Dave on how business is going, and then we're going to go straight to Q&A. Reminder, this is an interactive Q&A. We've got the Pigeonhole link. If you don't know where that is, you should reach out to our corporate access team. The Pigeonhole link will let you add questions. I'm monitoring that right now, and I will try to get to your questions if you put any in. And you can also vote on any questions that are already submitted. And so with that, Dave, hope you're doing well, and would you like to give a brief kind of few opening comments on how business is going the last few months and maybe outlook?
Okay, great. Thanks, by the way, Mark, for having us. Appreciate the time. Just always want to start with the preamble here that, I might make forward-looking statements. And those may have risk factors. So anybody that wants to look at those risk factors, they're filed in the most recent 10K. Also, I might make comments around non-GAAP numbers. So there's a reconciliation of GAAP to non-GAAP on the investor relations website. So thanks to everyone for joining. I hope everybody's staying safe and healthy. Just a quick, update on how the quarter's going. So we are a little bit more than 10 weeks through the quarter. We still have a little less than 3 weeks to go, and obviously those 3 weeks tend to be pretty important weeks for Micron. That being said, I think through the first 10 plus weeks of the quarter, we feel really good about how the business is going. It's tracking really well. Markets are tracking well. We seem to be executing particularly well operationally. So very pleased with how the quarter's shaping up. I think as we talked about on the call also, we're incredibly enthusiastic about how calendar 21 is likely to shape up for us. A lot of tailwinds to the business. Mobile should be really strong given 5G. The cloud business should, which is healthy today, should actually see, good growth next year. Graphics is, doing well for the quarter. We would expect graphics to do well through the year. Automotive is already starting to see a recovery, and I think any of the markets that have seen an impact from COVID, like automotive, like consumer, should start to see recovery. In some cases already are seeing recovery, should see recovery in 21. So, we're pleased, obviously, really pleased with how healthy things are for the quarter, and incredibly enthusiastic about how next year should develop, in particular, since it looks like a couple of vaccines will be available. We should start to see good GDP growth next year, recovering off of this year. That should also be helpful. We have had an impact from our industrial business. That should obviously be in a much better situation next year. So again, still a couple weeks to go. So, can't claim victory just yet, but, pretty satisfied with how things have gone so far.
Great. Well, the good news is you've just broken through $60 today. Now currently trading at 61 as I see. So clearly, I think investors starting to kind of get behind this. It's been for the stock, it's been a pretty fairly rough year, I think, compared to other tech stocks, right? And the reason for that has been some of the worries around demand, and pricing did great for a few quarters, and then has unfortunately weakened second half of this calendar year. Clearly we're all hoping for this recovery in the demand, which will lead to stabilization, recovery in prices. I know that's what we're forecasting, but I'd like to get from you comments on how you're seeing that demand picture play out. Maybe if we could first talk about data centers. That's been, one of the areas that many companies have pointed out has been the area of weakness from some, bit of an inventory build out, it sounds like, from some of the cloud guys, and on-premises data centers also been particularly weak. Are you seeing that come back? And, are you seeing it come back in this current quarter? Mm-hmm. If not, what are you thinking about that in terms of when that recovers?
Yeah. So obviously, it's data center is somewhat a tale of two businesses. On the cloud side, as, COVID started to hit and as people, started to move towards work from home and, e-learning and so forth, cloud had a, really big, pickup and, benefited a lot from that shift. And obviously when you have a good, couple of quarters, that is going to tend to kind of settle out. But I would call the cloud business pretty healthy and continues to be healthy. And like I said, I think calendar 21 is shaping up for a really good year for cloud. On the enterprise side, obviously that's been a bit more impacted from COVID, as certainly there's been less investment in that space, and certain end customers have been more impacted by COVID, and of course are investing less in that business. It might take a while for that, obviously, to recover, but, the likelihood is that it will as people move more back to working in, at the location of their business. And on top of that, as some of these businesses that have been impacted that invest a lot on the data center side for enterprise, the likelihood is that which is a headwind today will turn into a tailwind, in 21.
So, but, this current quarter compared to the previous quarter, has the cloud side improved Q on Q?
So as far as quarter over quarter, we did expect it, particularly because the fourth quarter had an extra week in it. We did expect, that not to be positive, not to incrementally increase. But I would still characterize it as pretty healthy, that business.
Okay. And, but still not quite at the level of where it was, earlier on in the calendar year, right?
That's fair to say.
So, when do you think it's going to get back to that level? Are you, confident it's going to get back to that level first half of calendar year 21?
Yeah, I mean, it's hard to say exactly the timing, but I feel pretty good about 21 in general for cloud. I think there was, this, if anything, the cloud business does tend to have a little bit of, a little bit of lumpiness to it sometimes. But, the market is very healthy. All of the cloud customers that we've heard from have talked fairly positively about their CapEx investments, both for this year and next year. So, we would expect that to be, a very healthy market for us.
I mean, I think one of the issues, I think, analyzing this cloud market, or sorry, data center market in general, is how big that cloud segment is, how fast it's growing. Like, through the cycle, it's growing very, very fast, right? That's pretty much undeniable. But it tends to be quite lumpy and quite difficult to predict. That's the problem with it, because it's so it's so opaque. And one of the particular things is, we don't really have a very accurate assessment of their inventory level. We hear numbers from expert network checks, a few numbers here and there, but we don't really have an accurate assessment. I mean, how does Micron get comfortable with that? Like planning around. It's a bit different than, when you're looking at the PC or mobile market, where you can see how many phones and how many PCs are being, made and sold, and you have a rough idea of the inventory. Right. Look at the cloud side, considering that's just far more opaque.
Yeah, I mean, it's obviously a little more challenging, but we do talk to those customers and get a good sense for what their annual consumption is going to look like. And we do cross-reference that with the expectations around capital spending, both from what the customers are saying, but also, what third parties are suggesting might be the investments necessary. I mean, one thing you can rely on is that, content will increase over time in that space for sure. And, their business profile is going to show growth. There might be quarter to quarter, perturbations in that business because, of timing of rollouts of, when data centers are going to get rolled out. But I think in general, it's a very positive and up and to the right, business. I think a lot is, or concern around that has been around, there was a pretty significant inventory build, through the course of 2017 and 2018. And, I think there's just general concerns around, hey, could that happen again? And I think, first of all, our read on the inventory levels is that it's a much, much different situation today. That there has not been that kind of build of inventory. And I think that partially we know that just, from our discussions with the customers and so forth. But I also think, that was, perhaps, earlier on in the maturity of, purchasing decisions. And I think over time, both from the supplier and the customer perspective, things have gotten more mature in that market. And I would expect it to behave much differently than it did, back in that 2017, 2018 timeframe.
Yeah, it makes sense. Are they giving your sales team or management team, any data around the inventory level, and do you believe those numbers that they're sharing?
Yeah, I mean, of course we get, inputs from the customers, but we have our own kind of models on the inventory levels at those customers based on our own kind of understanding of the markets. And, we have a whole market intelligence team that spends a lot of time kind of analyzing that. But, at the end of the day, the best indication is how demand looks like. And that gives you a really good sense of where things are most likely. And, I think right now, based on how we see things unfolding for the quarter, it looks like it's in fairly good shape.
Right. And demand, right? Is not the problem. Data centers. So then same question for mobile, really. I mean, I think the obvious strength there is this, migration to 5G, which, Micron's talked quite a bit about. So maybe touch on that. The content growth from 5G is obviously pretty significant. But the other area, of course, is the units. Units to market this year. There was quite a bit of weakness in the first half of the year. How are you seeing that playing out going into next year?
Yeah, so on a unit, I'll hit the unit perspective before I talk about 5G content. On the end units for mobile phones, we feel pretty good about next year. We expect growth to probably be, double-digit growth year over year, in the mobile space at the end unit level. Of course, we should do, much better than that because of the first question you asked, which was the content. If you look at a 4G phone, it was running somewhere in the 3 to 4 gigs of DRAM. As we migrate to 5G, if you want, or if a mobile customer wants a 5G experience for their end customer, our best read on that is it takes at least 6 gigs of DRAM. We've seen SKUs at 8. We've seen them at 12. We've even seen one at 16. So this is a pretty content-rich story from a DRAM perspective in mobile as we transition to 5G. 5G has done, I think, despite COVID, much, much better than I think I had ever anticipated. I mean, I think early on people were, once COVID hit, were suggesting that maybe 5G handset units would be somewhere like 150 million, I think was one of the numbers I heard. I think it's going to be well north of 200 million for calendar 20. It's going to probably be more than double that in calendar 21. And, given our content increases there, that's going to be a great story. And, another thing we've heard sometimes is that, hey, well, with the faster download speeds, is that actually a headwind on the NAND front? But we just haven't seen that. We've seen content increases on the NAND side as well with 5G. And I think it makes sense. You can download faster. you're going to download things faster and
Yeah.
more. And then you're going to want to store those things, particularly, in periods of time where you lose connectivity, and then you have a lot of whatever you downloaded, on your device. And so if anything, we think that the content increases on the NAND front in mobile as well. So this should be a huge, huge tailwind for us, next year and for multiple years, as 5G becomes, a bigger and bigger percentage of the, overall mobile units.
Mm. Yeah, it looks like the whole thesis of faster downloads being negative for NAND, it theoretically makes sense, but maybe we're not there yet. Maybe that's something to worry about later on, because if you can download more, you're more likely to. If you can download more faster, you are likely to want to keep it as a local backup, because when you're on a plane or when you're in a tunnel, when you're in a train or something, 5G connection doesn't work so well. So you're likely still going to want files locally saved.
Correct.
So maybe we move on a bit to the supply side. So, what are you seeing there on the supply side? Maybe you can comment a bit about what Micron is doing on supply. I think you've been pretty consistent that you're keeping capacity flat for both DRAM and NAND, I believe. Maybe you can just comment on that, and then move on to like competitors. Any worries about what competitors are doing on the supply side, particularly NAND flash?
Right. So we talked about in our fiscal 20 year that we pretty dramatically brought CapEx down, both in DRAM and NAND. In fact, on the equipment side, we brought both of them down more than 40% year over year. And that was in an effort to really partially to carefully manage, the bit output. The other reason was we were investing a relatively limited amount in our first generation NAND. And so that also helped. I think as we go into fiscal 21, if you look at DRAM, we'll be roughly similar levels in terms of front end CapEx spend, with fiscal 20. So again, trying to be very, very prudent, around, how much we, invest in that business to make sure, we continue to maintain, good balance. If we look at the growth rate for DRAM next year from a demand perspective, we think the likelihood is that bit growth is somewhere in the 20% range. We're going to be well below that. The industry, by the way, we think will be below that as well, but we will definitely be well below that, just to carefully manage bit supply. On the NAND front, as I mentioned, we had brought down also the NAND CapEx investment quite a bit in 20. We will increase that CapEx in 21. But that's more a function of transitioning from first generation replacement gate to second generation replacement gate. We just announced 176 layer last week, which is our second generation replacement gate. So we'll put a full investment in that this year. So that will certainly increase our bit output, but we expect that to be below the industry and below demand. So we're maintaining pretty healthy balance there, and managing things tightly. As far as the industry goes, I mentioned, I think the industry will undersupply demand in 21 on the DRAM front. On the NAND front, it's that's one that we got to monitor and be cautious about. Early on there looks like there's some healthy investment there, and our hope and expectation is that as we progress through next year, that will still be in a good supply demand balance. But that's obviously one we're more cautious about.
Yeah, agreed. I think the DRAM side looks like, on our numbers, looks like it's significant undersupply next year on DRAM. NAND flash tight, but not as obviously tight compared to DRAM. And so I think that the NAND issue is that capacity is being added already from like the Samsung right now, whereas DRAM, the overall capacity is still, flattish to slightly down, so for the industry. So, the DRAM situation looks great, but I think the NAND side is where there are worries.
Yeah.
Given a bit of capacity coming online from Samsung, and we don't know how much exactly, like how much and how fast they're going to add. They've started to add some, and I don't think even they've decided yet how much they're going to add, which is, which is a bit of a concern. And also what's YMTC going to do is another question as well.
Right. Well, I'm not going to pontificate about what the other players in the market might or might not do. I would just say, we are definitely, maintaining good discipline in NAND. And I would say, the other thing about NAND for us is, this 176 layer NAND has a great cost structure. It will be really good for us from a cost perspective next year. That, I think, makes us feel good about our position in NAND. Also QLC, which we said is now moving the needle for us, also, helps us from a cost perspective. So we feel, really good about the cost structure. We've been moving our mix to higher value products, which have, better margin, dynamics to them as well. That also, I think, helps us from a profitability perspective. What the other players may or may not do is obviously difficult for me to comment on or call on. As it relates to emerging competitors, we remain paranoid about, emerging Chinese competitors, no question about that. As we remain paranoid about all our potential competitors or competitors. But I would just say it's this stuff is really hard to do. It's we have proven that sometimes. One thing to get the NAND right, it's a whole other thing to get it right in a system with firmware and with a controller that works appropriately. The qual hurdles are unbelievably difficult in this business with the customers. They have high expectations and do not want to see their quality impacted by a lack of quality from the suppliers. So I think for us it's maintain our focus on that, keep the competitive edge. Super happy that we were first to market with the 176 layer, which I think is indicative of our ability to be ahead. And I think you do that in the technology space, generally it works out for you.
Do you think there's a chance that these Chinese companies get added to this entity list, like Fujian Jinhua was? You remember Fujian Jinhua was added to the entity list for essentially stealing IP from Micron, right? I'm sure you're aware of that situation. And it didn't work out very well for them, is what I understand, because they can't get equipment. I don't know that there's such an obvious case of stealing technology for CXMT, the DRAM player, and YMTC, the NAND player, but I'm sure there's probably likely some IP infringement here and there. So I'm just wondering, is there potentially a chance that one or possibly both of those, may get added to the entity list in the future because of that, IP infringement potential that they most likely have?
Yeah. Well, as it relates to IP, obviously we are super focused and we will do everything necessary to protect our IP, which we have, obviously done, most recently. But as it relates to government actions, we have no say in, what the government may or may not do. So it's hard for me to comment on what they may or may not do. I'm sure, they actively look at these type of things and make decisions based on what they think is the right thing to do. And by the way, that was the true of the case you mentioned, that did happen. We certainly didn't have any say on that. That was the government's decision, and we support that.
But yeah, sure. And I understand you don't know what the government's going to do. However, I haven't seen any litigation against YMTC or CXMT. whereas there was litigation from Micron against Fujian Jinhua. Is that just because they're too small that they haven't really shown up on the radar yet, or is it that the IP infringement is less obvious?
Well, we certainly had specific evidence around the prior case, and so we'll defend our IP when we have that evidence. If evidence comes up later that's where we believe our IP has been infringed, you can expect us to aggressively defend that IP.
Right. But yeah, I mean, the Fujian Jinhua case was like not just IP infringement, but it was actually IP theft as well, wasn't it?
Correct.
Because you don't need to have seen IP theft to have litigation. If someone's infringing on your IP, you can still have litigation on infringing patents. That's a much lower bar that presumably they're infringing, if not Micron's, then some of the memory companies, but we haven't seen any litigation so far. So I'm just wondering what the reason for that is, and it could just be that they're just too small, that they haven't really shown up on the radar screen because they're not really shipping any significant volumes yet.
Right. Yeah, I can't postulate a reason, to be honest with you, Mark.
Okay, well, there was a couple questions. I had a question on tech. You kind of touched a bit on it, and there was a question here from an investor. Can you share latest updates in detail about the node transition? What's the progress, and when is it expected for introduction to the market? Yeah, so you touched on NAND. Maybe talk a little bit more about the timing of NAND, and then let's talk about DRAM in terms of technology, if that's okay.
Yeah. So the second generation NAND 176 layer is in production. It's ramping as we speak. It does take time for that all to flow through meaningfully onto the cost side. So I think for the first couple of quarters, NAND's probably cost per bit is probably flattish, maybe down a little bit, but we really don't see meaningful cost declines until the back half of our fiscal year. That's where we really start to see, the traction around the 176 layer really take shape on our cost front. We talked about on the earnings call that we thought cost declines in NAND would be in the kind of, low to mid-teens %, and that's accounting for mix. Obviously, it's higher when you take out the fact that, we're mixing up as well. And the fact that 176 came when it did supported that timing. I mean, we certainly understood when we were going to roll it out. So we built that into our forecast for what we thought cost declines would look like for NAND.
So low to mid-teens for FY21, and that's all related to the 176 because the first gen had negligible cost decline, right? So this is all one. Yeah. And when is I just
Mark, I just want to make sure I'm clear about it though, is the low to mid-teens is also a function of the fact that high value solutions continue to be more and more a part of our portfolio. And so that tends to weigh down the cost per bit for us. I mean, if you strip that out, obviously the year-over-year cost declines are going to be more than low to mid-teens. But since we do have that mix element in there, we tend to talk about it with the mix impacts as well.
Because of the controller and other additional costs. Yeah, right. I get that. But when is the what is the expected, or sorry, when is the expected crossover for 176? When will that be mainstream node?
Yeah. So we haven't talked about exactly when it'll cross over. All I can say is, it'll be ramping through the year, and it will be meaningful as we progress through the year. More and more meaningful.
Yeah, it's interesting because it seems like your node's progressing quite a rapid pace from what you're just telling me, because when I look at the schedule of Samsung and others in the 128, even by the end of this calendar year, their 128 is still quite a small portion. Mm-hmm. I mean, they introduced 128, beginning of this year, but it's still I think it's teens percentage or something like that of their mix. It's still quite small. That's I'm not sure. Yeah, I'm just curious about your acceleration. Seems to be going quite well.
Yeah, I mean, first of all, I would say, when we do these node transitions, we still have a, careful eye in terms of the bit output and making sure that that doesn't get into a place where we feel we're oversupplying. So I think it's important to mention that. I think the other thing is, the first generation, which was our 128 layer of replacement gate, was, I think it was important to do, but, we never intended to put much volume on it, which I think for us really, kind of pushed us to want to move to the next generation quickly, to get a better cost structure for the product. I mean, I think also, quite honestly, we have been executing really well on techno transitions of late. And, I think this just exemplifies the fact that, I think a lot of the things that, that Sanjay and the team put in place to improve our execution has, really taken shape. And I think, the fact that we were able to achieve 176 layer early, the cost is going to be great. By the way, it's CMOS under the array still, so that makes the cost structure even better. Those things I think just are just examples of just really good execution, from the Micron team.
Yeah, I get that makes sense, especially since your first gen replacement gate wasn't a big node for you. It makes sense that you'd be accelerating 176. Okay, excellent. And then you want to talk about the progress on DRAM side as well in terms of technology node and the impact on cost as well?
Yeah, so we're now transitioning into 1 alpha, obviously. That's our new node. Progressing well. The cost declines, obviously, in DRAM are not to the level of NAND, which I think is also somewhat helpful, quite honestly, to the market. I think it helps keep the market just generally disciplined around bit supply. Our expectation is we're likely to have about mid-single digit year-over-year cost declines for DRAM in FY21. It is also actually, which is somewhat unusual, is also going to be impacted by mix. Some of the higher value products we do have higher costs. We announced the GDDR6 and 6X on the graphics side. That's got a higher cost.
That mix impact included in the mid-single digit.
So that's included, and so you strip out the mix, it's certainly higher than mid-single digits, but it's certainly not into the double-digit cost declines year over year, which I think also helps us be disciplined around the bit supply there too.
Yeah, that's consistent with everything from competitors, I think. Stripping out the mix, it's more like a high single digit, most likely, right? Okay, so just looking at the questions here. You kind of already asked this, but you kind of already answered this, but where's the biggest opportunity for Micron to improve relative to competitors? You already talked about the tech roadmap, but
relative to competitors on cost or on product, or was that a general question? So I think on the cost side, you're right. I somewhat answered that one. I clearly the first generation replacement gate, didn't have a cost competitive structure to it. And, I think important to get into this 176 layer. I do think that, really puts us in a really good cost competitive position. Also quite honestly, we are a bit behind still on the DRAM front from a cost perspective, still some, improvement to make relative to the leader. And I would, suspect that we will continue to make progress, there. As it relates, if we step back and look at this beyond cost, I think probably the biggest area of improvement for us is, on the NAND front in terms of just, rounding out the portfolio. I think we've done a fairly good job of, getting good traction in SSDs. But, at this point, a lot of where the success is in SATA. And we've been rolling out NVMe products beginning, more in the consumer client space, and working our way, through to the data center space. That progression is on track and going well, but there's still quite a ways to go before I think we can declare our portfolio to be in the right place, across the board in SSDs. So, I think we look to that, over the next year or two, I think we'll be in a better place there. I would say also on a relative basis, beyond just, progress made on DRAM and NAND, eventually, we want to, continue to build out a portfolio for 3D XPoint, which I think makes us unique in the marketplace, being able to supply DRAM, NAND, and be able to supply 3D XPoint, which we think, has some pretty interesting use cases, particularly in the AI space. And we launched our first product. It was just kind of a teaser product to get it out there. And, there's certainly a roadmap of products, both continued roadmap on SSDs, but also a roadmap on the memory front. And, I think we should look for those products coming over the next couple of years. And I think within a couple of years, that this will start to be a meaningful part of the revenue and give us, I think another competitive edge.
So opportunities in, I don't know why the screen changed. Opportunities in DRAM cost, NAND product portfolio, particularly enterprise SSD sounds like, and then also 3D XPoint. Can you talk a bit more about 3D XPoint? What's the status of that? What generation technology are you on? Where are you selling it? What's the status of that product? I think it'd be interesting to get an update on that.
So we're in really early stages. I would say that. We still have not had any meaningful revenue outside of wafers that we're selling to our prior partner in 3D XPoint, Intel. So, still a ways to go. We did announce a product. It had great performance, but, as always, these first products are more just to get the product out there, get the performance that we want. Then we got to, continually move to better generations that have better cost structure and also, hopefully increase the performance. That's really where we are, I think, in the, the progress of 3D XPoint. I think for the next couple of years, it's probably not going to be a meaningful portion of our revenue, as we kind of build out the portfolio and work on the cost side of things. But, eventually we're fairly optimistic about this business. And, I would say the early read from customers, we obviously are working with some of the, really big players in the space, with this technology. The early read's been very positive, quite honestly, about it. But, like all emerging technologies, adoption takes some time to get the use cases to the right place and get the cost and the performance to the right place. But we're optimistic we'll get there.
Is the gross margin positive or is it still negative on 3D XPoint, or is it just not even is it not even relevant at this point?
It's not relevant other than to say, we also have a fab associated with 3D XPoint that is only a portion of it's being utilized to run wafers for Intel. The rest of the fab is not running anything significant until, we really get to a better place on the product side. So, there is an overhead associated with that is, kind of a negative to our gross margins. We have, been working on the, kind of the cost structure of that fab. And, I think we peaked out at around 155 million or so in the third quarter of underload charges associated with that fab. They were down in the fourth quarter to more like 135. They'll probably be down again in the first quarter. So the good news is, while it is a big number and it is negative to our gross margins, it's a number that's going down. And so it is actually in some ways a tailwind for us And
That's negative.
ultimately, when products start to ramp, then it becomes, a non-event for us.
Can you talk about how many layers 3D XPoint is right now? Are you allowed to say that? The current generation?
Yeah, no, we haven't talked about that.
Fine, that's fine. Excuse me. There's two questions in from investors. So first, can you expand a bit on your thinking regarding EUV adoption? It seems like a diversion point in the industry with some competitors adopting it sooner.
Yeah, I mean, I feel, and I would say the team feels very confident about our path here. We feel really good about multi-patterning, the cost structure of multi-patterning, and I would say through the 1-gamma process in DRAM, multi-patterning just, pencils out way better, for us. That said, over time, could EUV be something we might want to utilize? Of course. I mean, we look at it with every node. We run the math on it and, based on the performance and the cost. And, at some point it might make sense, and we'll certainly adopt it at that time. We do have had and will have, from time to time, EUV tools just to run them through pilot lines and make sure that, we have a good sense for, what the performance will be. We make sure that our engineers are comfortable in terms of that process with the UV. We've actually built our clean room space, the newest clean room space we've been rolling out in different locations, to be EUV ready in the event that we need it. So we're ready to go. We're not dogmatic about this. It's simply a case of, we're just very disciplined around cost and performance. And as soon as cost and performance shifts in the right direction, or when that happens, we'll certainly be willing to use it.
Yeah. So you've got alpha, beta, gamma. So you've got 3 entire nodes before you need to adopt EUV.
At least, yeah.
At least. And alpha is just starting now. When is that going to be mainstream node, roughly? Is that?
Well, we're ramping it through the year, so I would say that as we exit next year, it'll be whether it hits crossover or not, we haven't talked about, but it will certainly be a reasonable amount of our volume.
And then another question in here from an investor is, any update on the Huawei relationship? Has anything been able to ship since September 14th when the additional restrictions went into place? Expectation, and then any expectation of how that relationship evolves under a Biden administration?
Okay, well, I'll answer that one first. Difficult for me to know whether things change as it relates to Huawei. We stopped for the 14th was the last day we could ship. The 15th was the first day we stopped shipping to Huawei. We applied for licenses as soon as feasible. We have not gotten a response back on those licenses, so I think it's unclear to us what will happen as it relates to that specific customer. I would say, we obviously, when one of a important mobile customer goes away, it's important for us, to make sure that, we win the business at the other mobile customers, because obviously, if one customer is unable to meet demand, that demand will be met by some other mobile customer. We did, I think, a really good job diversifying the business over the last couple of years, particularly with the leadership that we have in our mobile business. I would say that if you look at the impact of Huawei, negative impact associated with Huawei, we have done a remarkably good job in terms of picking up business with other customers, more so than I think we thought coming into the quarter, quite honestly. So we're definitely kind of ahead of schedule. We definitely believe that in fiscal 21, when the whole dust settled on this, that it would be pretty much a non-event for us, maybe impactful for the first half of the year, but over the year, not as impactful. And I would say, if anything, we're ahead of schedule on that.
Good stuff. All right. Another question in from the audience here is any strategy or actions under plan regarding the potential expansion from competitors?
Potential like expansion of factories and so forth. So is that what it means?
Yeah. It's talking. I'm sure they're talking about potential capacity expansion from competitors. How does that impact your thinking? Basically, is the question.
It doesn't. I mean, we watch demand expectations, both, kind of in the intermediate term and the long term. We kind of plan out our capital investments, based on that demand. I would say as far as we look out in terms of investments, both in DRAM and NAND, we feel that we can manage that demand. Sorry, I don't know if I said that right, but we think we can manage that demand through our supply through node transitions, and that we don't need to add wafers in any way. Really, the only reason we're adding clean room space is just because the process nodes have become so complicated and so many more steps that you need more real estate to be able to do those steps. Outside of that, we have no intention of adding wafers. At least as far out as we see. Hard to say, how other competitors are facing, the demand increases relative to what they get from a bit supply perspective. But from our perspective, we don't have a need for it.
So the rough strategy from Micron is try to keep the wafer capacity roughly flat and expand the clean room capacity as needed to keep that wafer capacity roughly flat. And then bit growth will be all based on the gigabyte per wafer growth.
Yeah.
Okay, excellent. All right. Okay, we're running out of time here, but one other question I had was specifically on the Hynix Intel NAND deal. Obviously that's a big announcement. How do you feel about it? How does Micron feel about it in terms of what's the impact of the memory industry overall? And I don't know. I mean, it seems like there's the beginning of potential consolidation on the NAND industry. Any potential for Micron to play a role in this next level of consolidation? I mean, and Micron played a huge role in the consolidation of DRAM. I mean, Micron was essentially the wrap-up play, essentially
right.
buying unsuccessful DRAM players around the world. Is there potential for Micron to do something like that in the NAND side?
Right. So obviously I can't comment on two other companies deciding to get together. So it's that is what it is. I would tell you that from our perspective, we believe in our organic story on the NAND front. We think we have good cost structure in our Singapore fab. We like the way our nodes progress has gone, the fact that we have been able to push on QLC like we have. I think what is pretty good success in terms of migrating our high value percentage up to, close to 80%. It was, I don't know, 20 or 30, if you go back far enough back. So feel like that strategy has worked well for us, and that's really our primary focus. That said, we will look at, acquisition opportunities as they come up, but the bar is really high. It's really high from a strategic perspective. It's got to really make sense for us strategically. We got to feel really confident around our ability to integrate, because that's where a lot of these deals fall down. And ultimately, we have got to get an ROIC that, is beyond what we can do organically. And so that's a really high hurdle, obviously, to get over. I wouldn't say never, for us, but I would say it's, relatively infrequent, if not really unusual for us to go do one of those, acquisitions because of the, the high bars we hold.
Makes sense. Well, unfortunately, we're about out of time. So, thanks very much, Dave, for joining us today, and Farhan, sitting there in the background. I can see you. Thanks both for joining. And thanks everyone else for joining as well. Dave, any final comments you want to make just to wrap up?
Just thanks everyone for taking the time. And of course, as you know, if you have any additional questions, you can funnel them through Mark. You can call Farhan directly. We're happy to answer any questions that any of you may have. And by the way, thanks for the time, Mark. I know it's very late or very early, depending on how you look at it in Hong Kong. So thanks for being up late for us. We appreciate it.
I don't even know, but yeah, that's great. Thanks very much. Have a great day, everyone.
All right, take care.